Howdy, listeners. Thanks for tuning in to The Circuit. I am Ben Bajarin.
Greetings, programs. I'm Jay Goldberg.
So I know I get this question a lot, and it's a relatively fun debate. But I'll sort of let you kind of kick off with your view because I know you get this question a lot. There's a debate going on about whether the semi industry is X growth. Not saying semis are dead, but people are certainly looking at different pockets of the market that are obviously saturated, and there's a whole host of the market where we know what shipment volumes look like. But this whole sort of debate, right, is the semi growth cycle over, is kind of this large theme that I think is interesting. So I'll let you jump off, and then I'll add some comments as well.
So I guess my take is the semis growth wave is not over, but the cycle is. And what, 2 years ago we were getting questions. I know I was. I'm sure you were too. We're getting questions like, are semis going to go to the moon, or are they going to go all the way to Mars? Like it was
Right.
It was the opposite. Like secular growth forever for the win, and that wasn't believable. And now the death of semis is equally unbelievable. The demand for semis is going to keep growing at a sort of fundamental level. We're going to keep putting chips in more and more things. But the great growth we've had for the last 2-3 years is over, and things are going to slow down. And I'm shocked to learn that semiconductors are cyclical. Oh my goodness.
Yeah. Well, and I also feel like what was missed of the last couple years was just how much this rush forward of digitization or the whole theme of rushing forward digitization and whatnot came forward, where it was a little bit of an imbalance. Like without that, I do think we still would have seen the same sort of kind of cyclical growth like you saw, and it's normalizing, right? I get that. That's kind of, I think, a more relative way to look at it. But no doubt, right? The pockets of the industry that people tend to get really excited about for right now, barring some future where we've all got AR glasses and 10 different devices on ourselves, actually manifests. The most interesting parts of the market are really not growing that much, right? Smartphones is saturated, PCs is saturated. We know the number of chips and servers. So, I think there's pockets where, again, right, you just look at it and you say, okay, it is going to be hard to get some growth from there, volume wise, not necessarily revenue, I suppose.
I think so. One, we have to remember, like, semis are big, right? Depending on how you want to add it up, it's $800 billion, $900 billion industry globally.
Yeah.
Right. And there are lots of people who are saying, oh, we're going to get to $1 trillion any day now. And it's probably, we'll get there. Right. So it's a big industry. We can't expect it to grow at, double digit numbers every year.
Yeah.
But there is an underlying growth that I think exceeds GDP growth globally, because more and more things are getting digitized.
Yeah.
Chipped. So, but at the same time, like, it's so big, there's only so much value in the economy, right? If semis keep growing for another 20% a year for the next 10 years, it would be 80% of GDP. I just made those numbers up, but you get my point, right? The value that each incremental sector has to deliver has to be significant, or there's just fundamental caps on how big such a big number can grow. So
right.
I think what we're going to see fundamentally is GDP plus a point or two growth for the whole industry. Some pockets are going to do really, really well. Other pockets are going to do less well.
Yeah. Well, and what's intriguing to me is, I sort of have this conversation with others, and I was like, well, look, even if this was let's say it was growing at a 40% CAGR, or the demand was there to grow at a 40% CAGR, we don't really have the capacity to meet that at some of the more leading edge nodes, which argue you could go into slight trail edge, not completely trailing edge, but something south of 10 nanometer. You can only make so many. You can only make so many wafers. You can only make so many chips. So it's one of those things where by nature of just overall capacity, we can only make so many semiconductors a year. And yes, people are trying to invest more, but that, it's a different variable than my software demand is 100% every year. Like you can make more software. It scales better.
So, on the supply side, we're not even adding capacity. Lots of talk this week about TSMC, who's clearly showing signs that they're kind of slowing things down, right? They're definitely, they reported earnings this week. Today's April 24th. So just last week they reported earnings, and they held CapEx for this year constant with their prior guide. But it's clear that a lot of that's already been spent. And so the second half will be weaker, and big questions about how much they're going to spend next year now, probably down a little bit. We talked about this last time. The big analog companies are all being very conservative. They're either holding capacity steady or, reducing capacity or reducing CapEx. Right. And so, the sort of most sober conservative people in the industry are, doing exactly that. They're making sober conservative calculations.
Yeah.
So we don't, because they don't necessarily see, 40% CAGR growth out there. If they did, they would be adding a lot more capacity. They know
that's exactly. Yeah. Yeah. I think that's exactly it. Right. I think and you read a lot of the commentary that they give, mostly the commentary I see from what they're giving to the street, they're essentially giving a very, like you said, a very reasoned outlook at their customer conversations as well as their demand curve, and have a pretty good feel for, that supply. I think if anything, right, they'd love to have a little bit more customers at trailing edge, but that's a whole different product segment than more at the leading edge. But yeah, you're right. I think that's the real key is they've got a good read on the market, and we sort of know what the conservative growth looks like for at least the next 12 to 18 months.
That's right. And I think that reflects cyclical more than anything else, right? We've had a lot of capacity expansion, had a lot of demand, all that's reverting to mean. And so, demand expectations are slowing. We don't have to go crazy with capacity.
Yeah, I think the cyclicality of it is a really interesting conversation when again, we think about how much more of the world, is yet to transfer or transition from analog to digital and get connected. Like cyclicality could actually come, and this is another part of the debate. So chime in on this too, because I think it's interesting, right? Cyclicality could come in even bigger waves, because again, we don't necessarily know the upgrade cycle of a lot of those. I mean, again, right, as more content goes to vehicles, or as more content goes to IoT and smart city and smart grid, like those are very unpredictable refresh rates, more so than what we see in PCs and smartphones and to some degree data centers. So I just wonder, is it going to be these bigger cyclical waves, or again, might there be some normalization on the way that everybody balances their supply chain?
Well, I think, let's look at it sort of near term and longer term, because near term, one of the interesting things to me about this cycle is the way that the demand curves have been staggered, right? In the past, we've gone through these cycles, and everybody tends to be fairly, correlated. This time around, every sector has started its contraction at a different point. PC started 2 years ago, mobile started a year ago. We're just now getting to the point where automotive industrial analog is going to start. It's just starting its downward trajectory, right? And the hope is, mobile bottoms out second half of this year. That's going to be in the middle of a big analog inventory overbuild, right? They're going to be writing down all that inventory, or lowering numbers. So I think it's fascinating. It's important right now because everything is a little bit different, and it makes it. I think it confused a lot of people because there's so many conflicting signals. I had a lot of people ask me like, "Oh, supply is still constrained, right?" I'm like, "No. Supply is only constrained in auto, and that was a few months ago. Supply has not been constrained in mobile for a year." Now, long term, I think you raise a really interesting point. What are refresh rates going to be? And I don't even think we're ready to have that conversation because a lot of these things aren't even installed. Smart cities, which is a pretty nebulous term, is still being, people are still trying to figure out what it means, right? And if we think automotive product cycles are long, local political city product cycles are going to be measured in decades. So it's years before those things get built. But there is a really good question. Like we've gotten to the point now where mobile phones, we understand the refresh rate. It was 3 years now, it's probably 4 years, somewhere in there, and it's been lengthening, right? Because phones are getting expensive.
Yeah.
What are refresh rates going to look like on cars? That's like, who knows, right? You buy a car today, and the software in my Toyota, like the family car, is it's pretty good for what it is. I bought it 2022. It's much better than the software in my wife's work BMW, which costs double the price, but the software is better in the cheap Toyota. What do it reminds me a lot of like mobile phones. Remember that there was that luxury brand Virtu? Nokia had a luxury brand of phones that was like diamond encrusted, platinum plated phones, Nokia phones that sold for like $200,000. Crazy numbers. But there was a point where those were being sold. They were feature phones, right? They were 12T, and they didn't do anything. And you could buy an Android phone for $400 right next to it. Like, why would you buy the super expensive phone that does less than the super advanced smartphone?
Yeah.
And I think we may get to a point where cars are like that too, right? And there'll be upgrade cycles in cars. We'll have right, and then we get to autonomy, which is a whole other thing in the future.
Yeah.
So there's an argument to be made that upgrade cycles for cars will shrink as electronics and software become more important. But that's still 5-6 years away before we can even really have that conversation.
Yeah. What's interesting too is like I keep, and this is, and I think everybody recognizes the point, right, in terms of the long-term conversation. What I wonder though is some of the angst, because I feel it to some degree with a lot of the investor community, because it is a really tricky cycle. I mean, I saw this report a couple of weeks ago that in terms of large institutional holdings, semiconductor companies are still generally underheld. And so I kind of always look at that and I'm like, it just seems like, this is kind of still an obvious growth sector, but there's still a lot of hesitancy about where. And I think again, right, just it's tough to model. A lot of this stuff is just kind of tricky and not normally how most investors like to run financial models on. But I wonder how much of that, right, it kind of gets into it. Well, how long can I be? How bullish should I be? Like, you make those trade-offs based on where you need to make money in a short term.
Yeah, the stock market has its much shorter time horizon, and so we have to contend with that. One of the things I noticed when I was an analyst, if I was having a conversation with an investor, trying to say, "Oh, I really like this stock. It's got all these really solid fundamental trends underneath it." Right. Once I got to secular trends, I'd already lost the argument. Like the argument's over. Right. If I could make an argument why the stock was going to perform in the next 6 to 12 months. It could be my favorite stock in the world, the best run company in the world, my long-term buy. They were going to short it, right? And they probably weren't wrong, right? For what they were, for their time horizon. So I think there was a lot of talk in the last few years about secular trends, and those are true. But for investors right now, the cyclical dominates everything. Like that, that conquers all.
Yeah. And it worries because, again, to your point, right, the areas where they used to sort of measure this, PCs and smartphones, both have been hit really hard, are both obviously very cyclical, also coming off some pretty ugly comparables with, again, longer refresh cycles. So it's a rapidly maturing industry with still some industries that are yet to fully embrace semiconductors, which I think is kind of an interesting modality as we break that up and look at different segments of the industry. It's rich with maturity and then also areas that are immature, but those immature areas are going to be even more so, right, in this cyclical growth that we're talking about.
Yeah, and it's not just new areas, right? There's GPUs are going to see phenomenal growth in the next few years. No one can get enough NVIDIA GPUs right now.
Yeah.
Because AI is the new thing. I mean, GPUs are, a 40-year-old category, but they're probably going to be the hottest sector in semis this year.
Yeah.
So
this year, maybe next year, maybe the year after. So on piggybacking on what we talked about last time, just looking at, one market's pocket of growth, what are you thinking some of the better growth measurements will be as we look at this, right? Maybe it's not volume, maybe it's revenue, maybe it's TAM expansion. Kind of how would you think about like measuring growth?
To me, the most important thing in the next few years is going to be pricing. And it's hard because not many companies really give much pricing data or unit data. But I think pricing is what's going to be really critical here, because there are going to be some categories like GPUs where, price it's a seller's market, right? It's price is whatever NVIDIA feels like charging. There are other categories though where we haven't had much pricing pressure in a long time, not just because of the pandemic, but just because of consolidation in the industry. And I think that is going to start to change. There's a lot of excess capacity out there, and so that bodes poorly for pricing in trailing edge. Certain analog categories are probably going to look pretty weak starting now. But I think pricing is the real key one. There'll be some sectors that are just going to have really strong pricing power. Probably not CPUs, but definitely GPUs. If somebody finds the right AI accelerator, that could do it. Really digitally capable analog chips are going to be in big demand now too. So to me, pricing is the key. Absent that, I'd like to look at, a good way to look at it is operating margins. I think that's always a very useful metric for the industry because, like with smartphones, we had this big thing where Apple had very low market share, but had all the operating profits of the industry. We're not going to see anything that extreme in semiconductors, but there are definitely companies that are going to have much tighter operating profits. That's probably the best way to look at pricing is gross profits and operating profits.
Yeah.
And I think that, but I think that pool is going to continue to increase because we're still constrained, and, there are a lot of categories where there's 2 or 3 or only one vendor. And so that's, good for them and their shareholders, I guess.
That's kind of one dynamic I think is interesting to look at is who actually has the ability to leverage pricing power. A couple of specific names come to mind, which you've mentioned several already in this show. But the other one is, I've always looked at companies when they're generally X growth, meaning that they're not adding loads of new customers, they typically try to, increase their ARPU, right? Raise prices or get more money from existing customers because they're just not getting new customers anymore. And so I think that pricing dynamic plays into how they'll get some of that growth, right? Where they can raise those prices. But also I sense that angst in all of these areas that you're talking about of the lack of competition, right? People saying, well, I don't just want to be beholden to this vendor. I would actually like some pricing negotiation so that I've got options and have, a more diversified supply chain. But it's not exactly that cut and dry in today's market. But that's kind of where to feed onto your pricing point, I can see, people really looking at ARPU or increasing prices of their products because, again, especially in these high compute areas, we're just not adding new devices that need that. It's a fixed number of products in leading edge compute.
Yeah, I mean, I think it's also important to realize how we got here because this is not just a function of the pandemic. This is a function of the last 20 years of Western semiconductors. We've gone from 2,000 vendors to 200. And a lot of that can be traced to it's a big wave of consolidation. You can trace a lot of it back to a very small number of catalysts to sort of force everyone else to consolidate. Notably Broadcom. Right? I think Broadcom's an important example. Avago, Broadcom did a lot of deals in the last 20 years. It's been fantastic for their shareholders. It's arguably, a zero interest rate beneficiary. But it's also, worth noting they don't do semiconductors anymore. They're focused on software. So I think we've had 20 years of consolidation, and that's left so many categories with three to one vendors, and they get the pricing power. And so my point is to change that, we're going to have to see new vendors enter the market. And, I realize in the back of my head, like the sort of thing that sort of I haven't articulated before, but I think there is an immense amount of trailing edge capacity in China that is going to be a part of the catalyst that shakes all of this up. Right, there are a lot of those legacy nodes are going to be incredibly price competitive in the next few years, and so anybody who can stay ahead of that will be okay. But there are lots of companies, even in the U.S., who are going to, feel that increasingly.
Yeah, totally agree with that point. I'm fascinated to see how that plays out. Whether that's new brands, white label products, like I don't know, companies getting into semis who weren't before but might have had an analog, control system, something, right? I'm super intrigued by that because again, that's the only place that I think you can really get capacity and start to actually push an invention cycle.
Yeah, I think it's a little better than that. There'll be some interesting places that, we talked a little bit about sensors last episode or the one before.
Yeah.
And I think there's some interesting things happening in markets like that where there are companies coming on stream now who have learned all the lessons of the past 20 years and are very lean, right? I know a team that's, 20 people built a AI accelerator in 9 months, right? So very, very lean. Or building new business models into what they do, so they have some other competitive barrier, competitive advantage. So there will be pockets that do better, but for a lot of other companies, anything that could ever be called a commodity I'd be a little concerned to be them right now.
Yeah. So you made an interesting point, and now I'm intrigued by your answer to this question because I know years ago we were all like. The answer was yes. Now I think the environment's a little bit different, but it's about further consolidation in semis. And I wonder if part of this is it even feasible that regulators would allow any more consolidation? And two sides, right? If no, then it's a clean answer, right? There's very little to no consolidation going to happen in semis. If it's yes, all right, well, that's kind of interesting. Where might be that consolidation come from?
So I think in the U.S. there is very little large cap consolidation left. There's a couple names that I can think of that are maybe possibly targets like Marvell, but who knows? There's probably a little bit of consolidation left in small cap analog. There's still a lot of small analog companies in this world. Yeah. I think I know a lot of people are looking at rolling up some of these really, really small ones. There's something to be done there. So there's a little bit of deal making that left there. But the big ones, no, I think it's going to be very, very hard, right? Both because the U.S. government has gotten much more wary of large companies buying other large companies, not just in semis, but in everything. And then there's China, right? I mean, China, there's a big article in the Wall Street Journal 2-3 weeks ago saying China has weaponized its M&A regulatory approvals, which is true. Like they'll sit on deals. It's not news. They've been doing it for many years, but it's true. They'll sit on deals that they don't like. Not necessarily because they like they have a policy problem with them, or specific to that. They're just trying to. It's geopolitics. It's a geopolitical thing. There's nothing to do with semiconductors or that company specifically.
Yeah. Well, and I think, maybe you'd agree that the way that the Qualcomm NXP one kind of shook out sort of made it clear that it would be really, really tough to get any kind of a consolidation like that to happen again. I think that was kind of the nail in the coffin for any further consolidation, at least of the big 5, 6-ish semiconductor companies.
20. Big 20, I think.
Big 20.
Yeah.
I like the name, the big 20.
I don't even know who's in that 20, but yeah, it's anybody of any size is going to be tricky.
Yeah. So back to the growth point. Like, this is interesting because with a number of those big semiconductor companies that we talk to regularly, it's tricky because you make the pricing point, and I think while they embrace that, right, they're always thinking, well, look, I want other people's customers, or I want, new customers. But it's tricky because, even the growth markets that we've talked to, maybe to some degree, data center, but also right in automotive, those are really long cycles. Like if you like, I put myself in the shoes of one of these companies. I say, okay, if I need to get really good growth, right, 20-30% growth in the next few years, it's pretty slim pickings. I mean, yes, good competition, but two, there's not a lot of immediate opportunities because of, again, saturation in some of these, premium parts of the market. I just don't think the answer for them is, right, analog and or digital trailing edge IoT. Good volumes, not rich, but again, but it's just a fascinating point to me that it's kind of hard to say, if I was CEO of so and so, where am I going to get my growth from when any area that's an adjacency to me is a really long cycle? Like, it's not going to be a year, not going to be 2 years.
Yeah, I mean, I think that's why everyone got so excited about XR, AR, VR.
That does, yeah.
Right? Because people are looking for the next hot category that's been driving semis forever, right? Yeah. PCs, then mobile, whatever, right? And we don't have that next hot category. We'll see what Apple launches, but that's what it's going to take. Apple's going to have to come up with its next hit product that everyone else is going to have to race after to be the next hit category, and that could take a long time.
Sure, but even on that point, right? And this is again why I think this is interesting. So let's just say that, again, it's not going to be this product. I'm not going to tell anybody it's going to be $3,000. Very few people will buy this. But again, let's just say that in the next 12 months, Apple comes up with something that is possible to ship in volume. Where are they going to get the capacity to make that? Like, you're going to make it on a leading edge node because that's what makes it small and gives you that amount of compute. TSMC is booked up for the next 3 years on 3 nanometer. So where are they going to get another 30 million, 40 million leading? Like, I don't know. It doesn't exist. So that's why I think these problems are funny, is because people say that, and like when the supply chain, you're like, you're going to start pulling semiconductors off the semiconductor growing tree, somewhere, because there's just no more capacity. It's locked up.
Yeah,
but that compounds the problem.
Example of that. Right. Yeah. I think you're right. It compounds. Like, and goggles are a great example of that because it's so clear you need the smallest chip possible.
Totally.
But even in larger categories, it's going to be tricky, right? I mean, some of these, like automotive, like you need a lot of automotive silicon. It's a good thing they're going to take their time with those product cycles, because by the time they make up their minds, we'll have enough capacity for them.
Totally right. And again, like, I had this conversation with some Apple investors. They were like, buy into my thesis, a little bit, that the Mac is a growth category. But I was like, again, let's just say that next year there's enough demand for 40 million Macs. Well, where are they going to get the silicon, right? There's demand for another 20 million iPhones. Where are they going to get the silicon? Like, it doesn't exist. And that's where it's kind of like, it's a fixed problem. I just think people underestimate the reality of that with some of these growth areas. Is we know those numbers and we know how many we can make to fit those certain product categories.
Yep. It's, let's think about it, because I know Apple has a pretty sophisticated operations organization planning out all of its manufacturing, including semiconductors. Yep. I don't know that a lot of the other chip companies are quite as sophisticated. Like the IDMs, the analog guys, do that, but like the operations teams at some of the fabless companies are, I don't think they're typically geared up to think long-term, multi-year strategically. I don't want to diminish their abilities, but they have a hard enough job just sort of planning out the next 9 to 12 months. Thinking like long-term is very tricky, very difficult for them. None of the chip companies have a good ability to forecast end demand.
Absolutely.
So it's going to be very hard for them. Sorry.
There's two dynamics to this that I think are super interesting. The first is exactly your second point, which is that I just don't think there's a better company at forecasting product demand than Apple. They have made some missteps along the way. Everybody understands, right? The iPhone, 6-ish, 6 Plus, they didn't think they were going to sell that many. Like, we get it. There was some problems, but as a whole, you'll never find a more consistent company. But let's just play devil's advocate and say that AMD, Intel, well, maybe to some degree not Intel because they are vertical in their own factories, but AMD, NVIDIA, you name it, right? The hard part is that when you're competing with Apple, who is generally supplier number one, priority number one for everybody in the supply chain, even if you wanted to plan that, you're planning around Apple's demand. You're second, you're third tier. So there's really not much you could do, right? Even if you wanted to be that good of a planning, your options are pretty limited. Because a good example of this, right? I don't know the exact numbers, but some estimates around TSMC, 3 nanometer is Apple will have 80% of that this year, and then almost 60% next year. Okay, so if you're NVIDIA, if you're AMD, if you're Ampere, if you're so-and-so, there's just a piece of the pie that you're left with, right? There's nothing you can do about that because Apple is priority number one. So it's kind of like, I sympathize with your point, which is like, you're right? They don't have that demand. But even if they did, I just don't think they could do it well. They're subject to what's left available in wafers after Apple.
And let's not forget, NVIDIA and AMD are customers number 2 and 3 at TSMC. Both of them are 100% on TSMC. Have made big commitments to TSMC. So Apple gets what they want. AMD and NVIDIA get not everything they want, but probably most of what they want. And then there's everybody else, right? It's, a few,
absolutely,
1,000 companies that are fighting for what's left over. And it's going to be very tricky.
And this is the thing that I think
but at the same time, TSMC is delaying stuff, slowing stuff down.
Mm-hmm. Yeah. Right? And again, has pricing pressure, like you said, has all sorts of levers at their disposal should they choose. But, and that's why, like, we, in all the supply chain, work that we do, like, I feel for a lot of these vendors because I hear them. They're like, oh, look, we can't get supply. We know Apple's ordered so many. But the hard part is that at the same time, right, if you're Avago, if you're NXP, if you're, name your supplier to Apple, for the most part, they're guaranteeing volumes for you. Like, that's a great sale because because of what their product demands would be, you basically can just block that up. They're a volume buyer. That's what people like. Like, not everybody's a volume buyer in this business, and that kind of leaves you with this supply chain dynamic that is really, really pretty tough.
Yeah. I recently did a consulting project for a tier 3 automotive player, and they want the scope of the engagement was to come up with their semiconductor strategy. Right. And because they all went through the supply constraints, and they go, oh, now we have to think about strategically, and 50-page report with all their options, distributors, VARs, long-term purchase commitments, working directly with the foundry, like all these not crazy, actually pretty solid strategies. And at the end, they said, yeah, you know what, we're too small. We're just going to double our buffer inventory. That's our strategy. Because there was nothing else to do. Like we can't directly engage with TI. We're the 200th largest customer.
Yeah.
We're just happy when they return our phone calls.
Yep. It's one of those things where, as much as I hate, the mantra and really the realities behind, big tech just gets bigger, or really that's just a friendly way of saying the rich just get richer. These are the negotiating leverage that you have for supply, for buying up supply, right? To be a guaranteed volume buyer, it's good money for a lot of these companies who also have to show this growth story that we're talking about, right? To their investors, it relies a lot on these big partners. In fact, even TSMC, right? TSMC said, we're expecting in the third quarter a significant customer revenue contribution for 3 nanometer. Like, who they're talking about. It's really no secret, but it's good for their balance sheet. So, yeah, I say it. I sympathize, but I also understand, the game from that side as it is played.
That's right. And a year from now, we're going to have the opposite conversation where there's going to be too much supply everywhere. Maybe not a year, 18 months from now, right?
Not everywhere. I mean, not at 3 nanometer.
Not at 3 nanometer, but a lot of other places.
Agreed. And that's the thing, like, to your point about trailing edge, like in TSMC's reports actually, and I hate to constantly keep using them as the bellwether, but for right now they are, right? They're actually underutilized at 7 nanometer. and 5.
Yeah.
So that makes some interesting questions, which is, okay, if there's capacity at 5 and 7, now what is that? I mean, that's not where smartphone makers want to be, or PC makers want to be, but there might be some good options for that in chiplets, for data center, for custom ASICs. I'm curious to see how that plans out, because TSMC needs, right, to keep making money from trailing edge foundries, and there's capacity at 5 and 7, which what 2 years ago was a fantastic
Right.
node. So.
Right. Right. I mean, it's interesting to me because it reflects what we've been talking about. You have a lot of capacity at 7 nanometer right now because of weak smartphone demand. If you're a company that makes chips for smartphones, do you hold back? There, right, we'll just stay on 7 nanometer. We won't push to 5. There's no point in pushing to 3 because we can't get past Apple. So let's just stay at 7.
Yeah,
I think 10 years ago that would have been suicidal, but now everything, all the nodes are taking longer. Hanging around on an old node because you can get capacity there might be the smart strategy, and I think that's an important change for the industry.
and what's interesting? I don't know the answer to this. Maybe if somebody listening does, I don't think anyone's done a non-monolithic on 7 nanometer, a chiplet approach. Like, I'd be curious if I'm wrong, I'm wrong. But let's just say that someone hasn't. I'd be very curious what kind of efficiencies and or creative block, compute you could do if you did approach chiplets on a later node and yielded some of that benefit by architecting, a system a new way on a later node. To your point, maybe a low-end product actually becomes a little bit more heavy compute, maybe more competitive with the 5-ish 4 nanometer product. I'd be fascinated to see if people start adopting approaches like that on later nodes, like leading edge technology, 3D stacking, et cetera, on later nodes where I don't think it's been done before.
So I think that's an explicit selling point of chiplets. I've heard that used before, where the idea is you can mix and match, not just different different parts, but actually like they'll be on different processes because that it makes sense. It certainly makes sense in mobile, where you have a fairly high component of the BOM is analog circuitry, which doesn't need to be at the leading edge. I think there are probably parts of even a data center CPU that having something at 7 nanometer wouldn't be the end of the world. Something I.O. maybe. I don't know. I mean,
well, and I remember that was a really good node for GPUs in particular. And so I just wonder, right, how much that could play in. I think someone might have used a 7 nanometer tile on a leading node, but I don't think anybody's mix and matched on 7 as a whole, like brought 5 or used 14. Do you know what I mean? I'd be really curious what would happen if somebody gets creative like that, which, to your point, people might have to do because these are the only areas where they can get capacity.
Yeah, I think one of the AMD CPUs, and I get my nomenclature confused, but one of them, the one that had all the chiplets in it,
started on 7. I can't remember if that was 5 or 7.
Yeah, I can't remember either, but I know that different chiplets in that MCM had different processes. They were all sort of on the same node, but there are different variants of the node.
Yes.
So we're almost there, right?
Yeah.
We're almost there.
Yeah. No, I love those creative approaches. Like, this is the kind of thing where I just really hope something unexpected, right? Something that we're like, that's clever. That's really cool. Like, just gets born out of that, right? That element of excess capacity and really good pricing. Because again, TSMC can do all that they want and control pricing on, 3 nanometer, their 3 nanometer B, but they need people. They need to fill those foundries at 5 and 7. So they're willing to be creative.
I think we're going to see it in China, right? I think there was a report this week that SMIC is still buying. I mean, SMIC is buying all the DUV machines they can because they want to beef up their 7 nanometer process.
Yeah,
because they don't have a roadmap past 7, but people are already impressed at the fact that they can do 7 at all. Like, I think when the trade war started, there was an assumption that they couldn't really get to 7. They're able to do it. We don't know how good it is, but it's, they call it 7 nanometer, and they're buying a lot more machinery to beef that up. They're going to have to be creative. They're going to, they
absolutely
can't get EUV machines. So I think we'll see a lot of interesting stuff come out of China just out of sheer necessity.
Yeah, and we haven't even broached because it's not there yet, but at some point we will. When if China does figure out more leading edge, what does that look like now from a growth standpoint, right? Once they bring capacity on, and for the Chinese ecosystem, perhaps in ways they didn't have access to leading edge before. Not that I mean, again, maybe it would act a giant pocket of growth. I'm not sure, but I think that's an interesting element when they do have that capacity, because obviously they're a huge market, digitizing like crazy. Semis is the core of the nation. And yeah, if they got to 7 and eventually 5, that could add a lot to the growth of the semiconductor industry.
Yeah, a lot of units. To your point, it's going to add a lot of units.
Yes, a lot of units. All right, well, let's wrap that up for today. Thanks for listening, everybody, and we will talk to you next week.
Farewell.